Hello everyone. My friends and I are going to present to you on tax audit and tax investigation in Malaysia. What is tax audit? A tax audit is an examination of your tax return by the IRS to verify that your income and deductions are accurate. A tax audit is when the IRS decides to examine your tax return a little more closely and verify that your income and deductions are accurate. Typically, your tax return is chosen for audit when something you have entered on your return is out of the ordinary. There are three main types of IRS audits. Mail audits. No matter what type of audit the IRS decides to conduct, you will receive notification of its mail. A mail audit is the simplest type of IRS examination and does not require you to meet with an auditor in person. Typically, IRS requests additional documentation to substantiate various items you report on your tax return. For example, if you claim $10,000 in charitable deductions, the IRS may send you a letter requesting proof of your donation. Generally, submitting sufficient proof will conclude the audit in your favor if the IRS is satisfied. Office audit is an in-person audit conducted at a local IRS office. These audits are typically more in-depth than mail audits and usually include questioning by an audit officer about information on your return. You will be asked to bring specific information to an office audit, such as the books and records for your business and your personal bank statements. You also have the right to bring an accountant or lawyer to represent you at these meetings. Field audits, on the other hand, is the broadest type of examination that the IRS conducts. In these cases, an IRS agent will conduct the audit at your home or place of business. Generally, field audits are conducted when the IRS is questioning more than just a deduction or two. A field audit is generally very thorough and will cover many, if not all, items on your return.
Just like many other countries, Malaysia does have tax investigation. Tax investigation involves the inspection of the business of the taxpayer as well as individual books. Usually begins with an unexpected visit to the taxpayer's business premises. Tax investigator will take custody of the required documents and books of accounts for investigation purposes. What is the main purpose of tax investigations? As the name implies, tax investigation is a method of enforcement conducted by the Inland Revenue Board Malaysia (IRBM) to ensure accuracy of tax filing. The aim of tax investigations is to investigate taxpayers who are suspected to be involved in fraud, willful defraud or negligence in reporting their income. Is tax investigation similar to tax audit? Tax audit is a regular routine inspection of a taxpayer's business financial record to ensure that they are compliant with tax laws and regulations. However, tax audit is not carried out surprisingly where the owner will be informed prior to any action. Meanwhile, tax investigation is conducted on a taxpayer suspected to have involved in fraud. In short, tax audit is different from tax investigation. What is willful evasion of tax? Willful evasion of tax refers to any action or deed performed with the intention of evading or assisting any other person to evade tax. Deliberate omission or understatement of any income from a return, giving a false answer, orally or in writing, to a question asked or to a request for information made for the purpose of the act. Falsifying books of account or other records, or authorizing the preparation or maintenance of false books of accounts or other records, making use of any fraud, art, or contrivance, or authorizing the use of any fraud, art, or contrivance. How does tax investigation work? The Director General of Inland Revenue, DGII, through Income Tax Act of 1967, has the power to put any taxpayer under investigation and tax audit. Tax offences such as non-compliance and tax evasion will be charged under the Income Tax Act. In the case of detection of tax offence such as fraud, willful defraud or negligence, the IRBM is empowered to conduct Additional assessments IRBM will further investigate your expenditure and income. Heavy penalties. The penalty will start at 45% and it can go up to 300% depending on the case imposed on taxpayer. Special penalties, where penalties start at 21%, will be imposed on taxpayer depending on the case. Fines, another type of penalty that depends on the case imposed on the taxpayer. Jail term, omission or understatement of income as well as over-declaration of expenses is considered a criminal offense. As per Income Tax Act, ETA, 1967, any person who committed for an offense will be fined either through penalty of imprisonment or both depending on severity or the number of offenses. For instance, fail to furnish an income tax return form will be fine Rm 200 to Rm 2000 or imprisonment or both. As for make an incorrect tax return by omitting or understating any income, will be fine Rm 1000 to Rm 10,000 and 200% of tax undercharge. Here is the types of offenses and the consequences. Now, you have know about tax audit and tax investigation. Thank you for watching.